Welcome back to another week, guys. We have a couple of people in here. I'm just going to get started at past. We do not have, I don't think we'll be trading tomorrow, mainly because there is the bank holiday. So, and because of that, I think this breakdown is going to be relatively shorter. It's just going to be the breakdown with no questions potentially, and then we'll do another one tomorrow which will have kind of that breakdown and more of a structure to it, but this one's going to be more of a shorter one. So I'm just going to get into it. Alright, so because the week just ended, right? So let's have a look at the monthly. Let's go down to the weekly. That's going to be our main view today. So cool, monthly, it's coming down, it's created that bottom wick. And now it's coming back up, right? You know, we're halfway back up into the monthly, so this could be the start of the monthly flip, right? If the monthly flips, we're expecting a top wick at certain areas before it's able to drive back down, right? So where are we expecting a top wick? So every time you closed respecting here, right? Understanding that it's this, right? You've come down to, at these 2 points, right? You came down to around these sorts of areas at least, right? So here, this one came down to here, and then you grab some more liquidity before coming down to these sorts of areas. So is there enough liquidity for us to come down to here, right? I don't know, right? I'm not going to predict price. All I'm going to do is, you know, look at what price is going to do and then take a buy or a sell according to what I think the shorter time frame and the lower time frame will do. But just looking on the weekly, right? There's some liquidity grabs around these sorts of areas, and this was after we touched into sort of 1777 sorts of areas, and then we rejected because we needed to grab more liquidity before we were able to come down towards around 1681, right? So around these sorts of areas here. So at this point, I would say price, you know, hasn't really tapped into these areas yet, but you have tapped into these sorts of areas, right? Like around here. So once you've tapped these sorts of areas, right, you could be good to have a rejection here. This is exactly what price is doing. So you have some sort of rejection here. You might need some more liquidity towards around these sorts of areas to come back down. But because you haven't really tapped into this area yet, I'm not looking for that really high liquidity grab, right? Because I'm understanding that it's still in the range, right? And at any given point, it's going to come down, fill the range before coming back up, doing something, and then coming back down. So because of that, I'm understanding that, you know, I think the daily closed bullish for the first time in a long time, right? So because the daily is closing bullish, it could be the start of the monthly top wick and then starting to come down, or that could have just been the weekly bottom wick, leaving a bottom wick for the weekly for us to come down and drive further, all right? So let's now drop down to the weekly. Weekly, obviously, we closed right respecting this, I would say, right, like exactly this sort of level here. So like it literally tapped this level, right? You know, you have some level of respecting here, some respecting here, some respecting here. This is the most recent as well. So I would say this is your general level, and every time price tapped here, you had some sort of rejection, right? So we're looking at these 2 times that it drove down, so from here and then from these sorts of areas, right, according to the monthly. So once you kind of tapped here, you faked out from here back up and you grab liquidity towards these sorts of areas, right? So let's mark this up. It's potential liquidity grab area. From here, right, you grab some more liquidity towards these sorts of areas before you're able to drive down further, right? But in both cases, you did come down slightly further, right? You tapped at least to, say, like these sorts of areas here, right? 1787, which means that, you know, at any given point, this could just be the weekly bottom wick for us to fill and then continue further down, right? So just understand that if the weekly is going to flip, create that top wick, it's going to be difficult to know where it's going to create that top wick too, because this could just be coming down slowly, and it could just be, you know, not needing any liquidity before it fills the range at 1787. So let's drop down to the daily. Let's see where the daily closed. The daily closed respecting this, right? What is this level? Let's have a look. It's not a bad level. It's an alright level, I would say. Yeah, generally, I would say you're respecting 1820 on the daily, right? So every time you came down, right, past 1820, where did you go? So this was your next range. So we actually filled the range. We filled the range down to 1810, like barely, right? We filled 1810, which means that we could be coming back up towards around these sorts of areas to grab liquidity before coming back down. What does this look like on the weekly, right? This is the weekly top wick, but it's not quite at these sorts of levels at 1873, right? So we're just looking at smaller liquidity grabs. It could not even get up to there. It could just come up to around, these sorts of areas where it's now, because it's just broken the previous 3 days top wicks, and it could start driving back down because we're still overall very bearish, right? Just looking at what is the next range that it is looking to fill or has filled, right? And I'm gonna put it here. This is, I would say, yeah, my next range is around here. What does it look like here? Yeah, cool. So this is my next range. So for the daily, I would say you're in a range between 34 and 10. Why do I say this? Why do I say this is the top of the range? Because of these here, right? Some levels there, yeah, respecting here, some respecting here, and so on, right? So this is my range that I'm in. We haven't closed below 1820, so we're in a range here, but we have tapped into 1810, right? These sorts of areas. So last time we tapped into 1810 sorts of areas on our way down is, this. We closed respecting here, so potentially at around these sorts of areas to drive up to tap these sorts of areas. What is this sort of area? Let's mark this up as this, right? This is 1875. Cool. So is this our first daily closure, indicating that we're about to change structure to go back up? It could be, right? But in that case, I'd be looking for buys to break this low somewhere in this range, right? Buys anywhere, like I would say in here, to come up to retest this 1855, right? And then once it retaps there, right, we could get into a sell for like a shorter, maybe like up to like here to here, I would say. So like this would be the maximum range you would trade if you were trading on a daily. But understanding that this is the weekly top wick now, right? This is next week's top wick. So once it does create that, it could come up all the way to 70, 75, or even closer to 86 before you start driving down again, right? So it's unclear at the moment where it's going. So we have to go to the smaller time frame to have a look. But generally, I would say you're looking to, as you're respecting these sorts of areas, right? You're looking to come down, create that bottom wick. Like at some point, this structure here was respecting 1810, and then it was like looking to close bullish, or like some sort of training structure here, broke all the lows, grabbed liquidity, started going up. So that's exactly what we're looking for as well. Something along those lines where it can break that structure, come down anywhere between like 1803, I would say 1802 sorts of areas, and you could be looking at some sort of rejection around those areas. But that's on the lower time frame, so let's have a look. So I would say currently the overall structure on the 4 is very confusing. Why do I say that? It's because you've come down, you have your structure coming down, right? You're in a range and you broke the range, right? Came down lower high, lower low, right? But then now you're creating a higher high. So what does price want to do? I don't know, right? So if price wants to go up now, right, that means that this was a liquidity grab and a fake out. And then this could be, when the 4 hour kind of breaks these highs, comes back, breaks that low, could start driving back up, right? So this could happen, and we might not get that bottom wick towards these sorts of areas. Ideally, we do, because then we can get those buys at like a kind of wick level to come. But expecting it to come down from 1829 all the way down to around these levels, that's like 240 pips. That's difficult, right? So it might not happen. Just understand that. So in terms of structure, it could be looking to go back up, or this could have been a fake out as well, right? So what's to say this isn't the actual continuation of the bearish motion, right? And this is the liquidity grab, right? Breaking all the highs to come back down, right? So the 4 hour is confusing at the moment. So there's no trades based on the 4 hour, at least for the time being. However, if you look at the 1 hour, right? 1 hour, just using the same zones, I would say you're now respecting this sort of area. I'm going to move this down a little bit. I would say this is a fake out, but I would say you're respecting this, and my 1 hour range is kind of from here to here, right? So you're in this range now. You've broken all the lows, grab liquidity to come back up, right? So on the 1 hour, it's looking a lot cleaner. It's looking like you could be actually continuing up, right? But for you to continue up, you would need some sort of range here, potentially a range above here, and then breaking the lows to go up, right? So once that happens, I'll be looking to take those buys at around these areas within this kind of range here, but I would need a confirmation that it's going up. So what this could look like is a break below, a break above, grabbing liquidity, breaking these lows, go up. And you'd probably, I don't know how this low, how low this will be, right? But I would say generally you could have, you know, one buy at around, what, like around potentially these levels, and a second buy towards around these levels. So how many pips away is that? So that's around 70 pips away, but I would say those are my kind of levels. And if you start breaking below, it's difficult to say because you could need to come down to create that bottom wick. I would actually take my first position after you broke this wick probably, so first entry around these sorts of areas, just because I'm understanding if it comes down to here, it will have some level of rejection likely. If not, it will reject at around 1820. If not, it's just going to continue to drive back up, right? Your level is kind of here on the hourly. Is it here? Yeah, it's around these sorts of areas. So taking an entry around this area is okay, kind of mirroring what happened here, right? So you have this, right? Some rejections there, but I would say where would your stop loss be? If this was your entry, you actually got an entry here, right? I would say your stop loss, like I would put it down here, but once it closes bearish, or like if say the hourly closes below this range with the bottom wick, I'd be looking to get out, mainly because again, we don't know what the 4 hour is showing, right? This could have been a liquidity grab for us to continue down. So if that's the case, if it's closing below here on the 1 hour, you could just be looking to retest the lows, and you could save yourself potentially like 80 pips worth of $8 worth of the move, right? So just be careful of that. So let's go down to 30. Let's see what the actual price movement is doing. Let's drop our ranges slightly clearer. Yeah, this is, it's a bit of a weird, there's a lot of stuff that's happening here. So the higher time frame is definitely your clearest structure, but we can do what we can try, right? So say your general areas are around here. Let's say I can move this up to here. I would say, yeah, so this is your general, your actual levels. Yeah, I would say this was actually a fake out potentially. Just looking at where this tapped last time, right? It's tapped here, respected here. This could have been a fake out, filled the range, but going back up. So this could be on the 30. It's looking cleaner, right? The lower time frames look cleaner for the buys. The higher time frames look, you know, currently still to be overall bearish, and you could be grabbing liquidity to come further down. But we understand that the shorter time frame, the lower time frame, will show us where price would like to go to grab liquidity, right? So we're looking at potentially filling this range up to here this week to 1855, and then once that happens, you know, we'll look for some top wicks, and we'll look for to come back down following the daily, the 4 hour, and the weekly kind of bearish motion, right? But generally, I would say if you're looking to take buys during, I don't know, I haven't really traded many bank holidays before, or just holidays in general. So let's have a look on the 30. Actually, let's look on the hourly, because I'm worried I don't have enough candles. But let's say you get a break above 1833 in a kind of like bullish motion, right? So break above 1833, you're looking to grab liquidity towards these sorts of areas, potentially these sorts of areas, right? 1833. Yeah, 1828, not looking bad. Say you have, let's go remove this. Break above, this is not very clean, but you kind of generally tapped down to 1830. these sorts of areas. So I'm going to mark this up as like the bottom of your range. And what does this look like here? This is a little bit lower, so if we want it to be lower, where is the next level? I would potentially put it, what's the next level down? I would say these are my pineapples, right? 1826 would be a pineapple. I wouldn't say it's your first entry. It's very interesting what this is doing. Gotta put it here. So I could be looking to take my first positions, I would say, around these sorts of areas. And I would take a pineapple around here. And how many pips away is that? That's about 40 pips. 40 pips is okay. And then I would say your stop loss, probably for the first position, like, I'd like it to be down here, really, around 130. What does that look like? If you got a buy, oh, you can't take a buy here, sorry. If you break above, you taking a buy here is actually dangerous. I'll take a buy first at 1826. Yeah, 1826 is okay. So if I had a buy around 1826, stop loss I would say is probably below this low here, because those usually reject quite hard at around these sorts of levels. If not, you reject at 1821. So I would be looking to have about 120 pips stop. Let's just have a look again. You broke above 1833. You came down. Maybe around like 1826 sorts of area, 1825. These zones broke above 33. So I'm looking at this mainly because look, you filled the range, right? You filled the range, but you didn't have enough liquidity to continue up, so you grab liquidity here, right? If you grab liquidity here, you're starting to go back up. This means that, you know, this was enough liquidity at this level needed to get tapped. A fake out around here, so I'm just worried that if you're faking below, you could look to fill that range that is a fake out, which would potentially take you down to 1823. 1823. I just want to establish what this range is. 1823, is that a valid range? Between 1823 and 1824. 1823, 1824, 1823 looks slightly cleaner. What does that look like in our current time? Yeah, 1823 is this range, right? Okay, cool. I would have my first position here. If it's looking like, you know, you're not closing any, like you have no bottom wicks and stuff, I would potentially take another buy here, but I would actually have my stop loss slightly tighter then. So if I had this, the stop's probably around here, actually. Around here. So let me mark around here or here. I would need it to respect this. If it's respecting this, right, and you broke above, yeah, I would have my stop around here. Here's fine. So I would have this. So my trade would look something like this. What would I target? Because it's a 1 hour thing, if you're breaking above, you're looking to fill the next range. I would say you're looking to target probably 2 ranges up. So I would say top of this range here, but then you're most likely going to close full towards around between, say, this. Oops. Somewhere between here, you're looking to close full. Yeah. I would see that. Does that make sense? So for 2 R trades, get those multiples. It's not a 9 to 5. If you pyramid for 2 R trades, you will have an 80 R multiple. After that, you're on your way. Wow, Mr. RR over here. Yeah, we don't trade like this is rare. An 80 pip stop is rare, man. If we get honestly, what Don would use is this, the 160 pip stop. But he would probably look for a better entry towards around 1823 instead of 1826. But I would say this is more of an aggressive one. if this happens, you could, because the 1 hour and the 30 is looking clean, right, in terms of bullish movement up. I just needed to break below here, and I don't know how far down this will go. I'm worried that it won't even tap 1826 before going up, because this was such an aggressive liquidity grab, right? It filled the range, right, and then went all the way back up, right? This 30, because I remember I took a trade around these sorts of areas for this 30 to flip and come back down, because I thought this was going to be the fake out, right? You faked out, you closed back into this range, but then I took a huge L here. I stacked 3 sells coming down, and I lost that, which means that, I'm not like dwelling on the losses, whatever, but it could mean that price is actually looking to come back up, right? It's looking to create that bullish structure now. So if that's the case, we're just looking for buys now, right? And the sells don't matter anymore. So cool, that's my buys. Let's look for sells, right? I'm gonna leave the stop loss. Okay, so cool. Let's look at the hourly in terms of sells. Actually, let's look at the 4 hours. So cool, we broke above here around 29. I'm gonna move this up to here and see if that's respecting anything on the 4 hour. 29. Yeah, you could be respecting this, right? I mean, pretty straightforward. You could be looking for a sell around here. Yeah, because you're bearish. If you're respecting 29, top wick at around 33, could be looking to get your sells, right? So you could potentially, this was a sell around here, right? Just looking 29. This 4 hour. I would say you're gonna see some structure because you're in this range. You're currently in the range here. You close respecting 29, but now you're in the range on a smaller time frame. I'm gonna highlight this and see what happened here. That's what I'm interested in now. Let's go to the 30. Because I know on the 30, what's happening now is that we're ranging hard, right? Ranging hard between 29 and 33. But here, we didn't. We just kind of tapped, started coming down. So, if that is the case, right, we can't take ourselves at 33. We have to look for other places we can take ourselves. And where will that be? Potentially at the top of this range. Looking at like these, potentially. Around 40 something. You're respecting. Above 29. Yeah, around these sorts of areas. 37. What does this look like in terms of our closing? Respecting 29. Respecting 29. Respecting 29. Cool. I'm going to move this down ever so slightly. I'm going to have sells around here. Let's have a look at what that looks like in terms of our own. So breaking the highs. We're going to see what that looks like on the 30-minute later, but this, let's go down to the hourly. Who's trading tomorrow, by the way? Be interesting to know who trades on a bank holiday, because I don't really have much experience trading bank holidays, so if it's valid, I'd love to trade it, right? But if not, I don't know. Yeah, okay, cool. I'm looking for sells around 1837. Depending on if price starts closing against like back below kind of 29 sorts of areas, like we're looking for bearish movement overall, right? Sure, you can, like, if it's still bullish, you can still look to take a buy around these sorts of areas, but you understand that then you're only looking to capture a very small range. If you're looking to catch a bigger range, you will need kind of bearish structure. So yeah, 30. So last time you were respecting 29. I'm looking at like potentially grabbing this move from here to here, right? So if you're moving bullish again, right, you need to grab liquidity before going up. Respecting 29, that's what I'm looking for, right? Like we're in this range here, so I'm looking at this as well. Every time you're in this range here, what did you grab liquidity before you were able to come down? This on the lower time frame is going to be some range here, and then a liquidity grab to go back up. So I would say your first position is probably here. Your second position, I would say, is probably up around these sorts of areas here. 37 to 41. Those are my two general areas. If you look at the 30, right, what does this look like on the 30? If you're respecting these ranges, I'm just taking a cell, it just so happens at the top of this range, right? And then my next cell is somewhere, I can probably refine it a little bit. So let's do that. General bearish. You can move this way up to around here at least. Understanding that it basically taps this level every single time, right? So yeah, cool. My sell levels are here. And it just so happens it's kind of at the top of that range as well. So I'm understanding that on the hourly, right, if you start closing bearish, you know, you faked out here potentially, and then you kind of start coming back down, and then you're like doing something like this, right? But this has to have a bottom wick. So oops, this candle needs to have a bottom wick. Then the next candle, right, if it comes up around these sorts of areas and it starts flipping bullish, that's the sell I'm going to be taking. Right, so something along these lines. Yeah, and then I'll have my first position here. If it comes up to here, cool, I'll have a second, but it doesn't need to, right? And that would make sense on the 4 hour, right? Because then this is just a liquidity grab, including this, to go up. But I wouldn't look to target all the way down to here. What I would look to target is I would look at the 30, right? If you're closing below here, coming here, I would look to only target potentially up to around 33, because I'm understanding that, well, at least stops to break even are there, right? If you're closing bearish and then you wake up all the way to these sorts of areas, right? Let's say you wake up to here only, right? Let's here. I would only target here because this could be a liquidity grab to come up and start doing this. So if you're holding all the way down to here and you didn't get out here, or you didn't move stops to break even here, and it starts going back up, you're fucked. And then it's just going to drive, you could create higher highs, higher lows, and it's not going to come back. So that's your only opportunity to bring stops to break even. And then, you know, if it taps here, then you're out, right? If not, you could leave potential runners if you see it's breaking structure again, coming back down. But yeah. Yeah, I guess I could take a couple questions, but those are my kind of levels today. Generally, I would like to see some structure being formed. I don't know, bank holiday. Does anybody trade bank holiday again? I don't know if I... Okay, let's look at some questions really quickly. Some oral questions from Justice. I'll remember you, bruv. Honestly, we have been having bigger moves during bank holidays than on regular days. Ah, fair enough. Might look to trade bank holiday then. Do I trade ICT? No, I do not even know ICT. But as in, like, I know who they are, but I don't know any of their concepts. With bank holiday, there's normally reduced volume, so less likely to get breakout. Okay, so less likely to get breakout and moves into new ranges. So it might be better to play within ranges setups. Oh, okay, that's the question. I don't know because I haven't traded bank holidays before. I guess I will find out and I'll let you guys know. 80. The white zone is liquidity, sir. Bro, I actually just removed all my white lines. Sad. 1840 is a strong sell level for wicks. I mean, if you are looking for 1840, you know, that's kind of within my zone here, right? I guess you're looking potentially at this, right? Potentially this, which is around 1840. 1840.7, yeah, so that is kind of aligned with what I'm looking at as well. The war in Gaza pushing gold, I don't know, right? And I'm not going to let that influence my trading because I understand price action and I know news will affect it, but I don't trade news, firstly. And secondly, I only look at what news does to gold and then react based off that. If I'm trading news, then this is not the stream that you should be coming to learn from if you want to trade news. Yeah, and also look, this is gold USD, right? I know that everything kind of affects the US dollar, but the Middle East stuff is sure, you know, there is some level of affecting there, but is it going to move gold all the way back to 2K? I don't think so, right? So I'm not that interested. When would I want to use smaller time frames over larger ones? I would say generally you're looking for higher time frame moves because they give you your structure, and then you're looking for entries on the smaller time frame. if you're looking for moves on the 5, the 15, and the 30, you can, but then your entries are on the 1. Does that make sense? Like, you can't look for entries and setups on the 5, because if you do that, you're looking for a 5-minute move, but that's just part of a 15-minute move, and that's part of a 30-minute move. So if you look for those smaller time frame moves, they're so small that you can't really take advantage, or they also get influenced by too many other factors, so they're not like accurate a lot of the times. You need to look at the like the higher time frames give you the big picture, but they don't give you details, right? So for example, you know, if I'm just looking at the higher time frame, like the 4 hour, for example, I would just see, you know, generally you're kind of bearish here, but then you kind of broke the highs. Like the 4 hour is confusing, right? The 30-minute makes a lot more sense, but I can't trade the 4 hour because it's confusing, but I can trade the 30, right? Because I understand that if the 30 is my setup, right, I'm getting a potential buy around these sorts of areas on the 30, I can look for an entry on the 5, and the entries could be around, you know, these sorts of areas, anywhere between potentially 25 and like, you know, 20, 23 all the way down to 22. Wow, we have 40 people here. Jesus, that's a lot of people for a bank holiday trading day. But yeah, cool. I think that's basically the analysis, guys. Like, it's a relatively short one. Is it fair to say that sells at 1840 would be viable if the candle before respects 1837? So you're looking, okay, so if price, for example, comes up to here and then it closes bearish, and then like bearish with like a bottom wick, right, and then hasn't filled the range down to at least like 1834 yet, maybe you could get like a sell around these sorts of areas. But like, what does this look like to you, right? You're taking a sell when it's like this. It could just continue to rip up, right? It could just do this, right? But potentially, if price, like this candle, right, if this closes like this, right, or for example, if this comes up to these, let's go back to the 30. 30 is clearer. Let's say the 30 closes bullish and then bearish back into range, right? If it does this, yeah, I'll look for a flip. I'll need this to have no bottom wick, come up to tap these sorts of areas, 37. You could look for 40 and then back down. Does that make sense? You had a sell from Friday? Yeah, I had a sell. Like I had 3 sells. I stacked 3 sells. I actually lost my entire week's profit. But it was actually, I think I would have done the same thing every single time, so I don't feel bad about it, because it's my plan, right? So I took, so after it was based on a 30. So after price, I had this zone marked up instead, so it was like this. So I saw this, right? So at this point, we were here, right? We just closed. We had this massive grab, like this was a fake out to come up to grab liquidity towards around these areas, right? Ooh, that just happened out of nowhere. I'm gonna delete that. But once it came down, it had no 30 bottom wick. I was like, cool, this could just continue ripping down. So I took a sell at like the top of this range, and then I stacked another one. Once I think like these 5s just had no bottom wick. This was respecting the top of my range. Took another sell, I think around here, or the top of that range. And then once it came up to these sorts of areas, I think I took another sell right here, because I understand this is the top of your range, right? And you had no top wick. I was like, oh, wow, okay, if anything, this is going to come down. But I set my stop loss to like here, 1833, or where was the top of the 4-hour range? Yeah, like 1833 sorts of areas, right? Breaking these highs. I didn't think it was going to break these highs. So, oh wow, that just pushed all the way up to 18. Jesus. Well, the analysis has now changed massively, right? Because this is your weekly massive top wick. Start coming down. And you just tapped into 1855, right? So now, I would say, generally, let's have a look at what this looks like on the weekly time frame. I would say if you're coming up so bullish, you can't take a sell right now. Yeah, you can't take a sell right now because you're understanding that once it does this sort of stuff, it usually taps into these sorts of areas, 1871. And if it does tap into 1871 sorts of areas, then cool. I'll look for my first rejections towards that area. But I'm also understanding that it could just be something like this, where it just goes up, continues, flies, right? This had no bottom wick on the weekly and it just flew up. So there's no sells, no buys, no sells for me until some structure forms. What does this look like on the 4 hour? Yeah, just straight up, right? I know you're tapping into these sorts of areas, right, on the 4. But again, if this is your weekly, this is the weekly top wick, it's already created the previous weekly's top wick. The monthly has actually just flipped, right? So taking a sell right now is impossible. If anyone wasn't buys before this happened, congratulations, you just made 270 pips. But yeah. Who was in a trade? Who was in a sell from the week before? How are you? Yeah. How was your sell? Oh, you blew it already. Okay, thank God. If not, you would have been fucked now. And you even created you're creating top wicks for this daily as well, right? You could flip if you start flipping. This is a great place to flip, right? Look at this. This is the level you're now tapping. Say down to around these sorts of areas. You're tapping this level. This is the top of your 4 hour range. But it's just taking a sell here is difficult. Top of your 4 hour range. Yeah, I could do something like this, right? But if it does that, closes respecting certain levels, I'll look for that top wick to start coming down. But yeah, that was very quick. Yeah, see, so this could be the 5 just creating a bottom wick for it to continue flying up, or it could just correct the entire move. Who knows? But yeah, cool. That's the analysis, guys. I'll see you guys tomorrow for more analysis, and there's gonna be more questions and everything. So yeah, do I think it's gonna continue dropping without retracement? Yeah, there's no way. Cool. Thank you very much for joining, guys. Cheers, Nab, for coming by. Cheers, Bougie. Cheers, Tom. Cheers, everyone. Yeah, I'll see you guys tomorrow. Have a good one.